Materials costs. Materials have to be accounted for as they're used on each job. So there's a materials account in the general ledger, which is a controlling account, and there is a separate account for each type of materials in a materials ledger. So debits to this account or these accounts are increases in materials in those accounts based on receiving reports and suppliers invoices, and then decreases or credits to the accounts are based on materials requisitions going out for particular jobs. The receiving report is prepared when materials that have been ordered are received and inspected to make sure that they are the correct materials that were ordered. The quantity received and the condition of the materials are entered on the receiving report. This chart shows the flow of materials costs. So you can see it begins with the receiving report, and that is the document that's prepared when the materials that were ordered actually arrive. And so whoever is in charge of that goes through the materials, make sure that they are correct and everything that was ordered is there, and they put that on the receiving report. And the receiving report is the source document that's used for recording materials received in a materials ledger card. Materials ledger cards are perpetual records that are updated each time materials are purchased and then each time materials are issued out for use in production. So you can see from the materials ledger card, direct materials and indirect materials are requisitioned, essentially requested to be used from who is holding the materials from that inventory. And then each requisition is recorded. The materials are requested and approved to be used in a job. So direct materials that can be specifically traced through production, so larger materials that go into a particular job. Those are the direct materials. They can be traced specifically to that particular job. Those are direct materials, and they will go through to the job cost sheets, those costs. The costs for indirect materials will go through to factory overhead, and we will talk about that in a separate part of the chapter. When materials are purchased, it is just a very simple journal entry similar to any other types of purchases a business would make. So the account that these materials go into initially is called raw materials inventory. So you debit raw materials inventory and credit accounts payable. The amount that you use for the journal entry is based on what shows on the receiving report. So the supplier's invoice is received, the receiving report is prepared, and then the journal entry is made to record the purchase. So this down here shows you the basic flow of the cost from when you initially get the materials. So raw materials is where those costs start, and then they work their way all the way through this process until the item produced is sold. So the rest of this portion of the lecture will show how raw materials flow through the process. A recap on direct materials and indirect materials. Direct materials are costs that can be cost effectively traced to individual jobs. Those costs are recorded on job cost sheets. Remember, a job cost sheet is essentially a record of the materials and labor costs that go into a job. So if the direct materials are recorded on the cost job sheet, what happens to the indirect materials? Those are trivial costs. They still have to be recorded somewhere, but they are trivial costs like tape, glue, or oil. You cannot practically or cost effectively trace those to an individual job, so they're not going to go on a job sheet. Where they go is into an account called factory overhead. And this is a temporary account where all the indirect costs go. I mentioned requisitions. So here's an example of what a requisition might look like. So when a job requires materials, the person over the job or over that particular part of the manufacturing process will prepare a materials requisition, kind of like a request. They will send that to the materials manager. So for direct materials, like I mentioned, the requisition will show the job number, the types of materials, and the quantities needed. And those will go onto the job cost sheet. So the storeroom will release materials once the materials requisition is received, and that serves as the basis for recording materials used. Requisitions are often accumulated by job and recorded in one journal entry. So you see here, there would really just be one journal entry to show the requisitioned materials so that you're not doing a journal entry for each separate type of material requisitioned. Those requisition material costs would be accumulated together into one journal entry. When this journal entry is made, you can see that you are essentially taking the costs from the raw materials inventory account and moving them into the work in process inventory account. So we are continuing to go down the cost flows from raw materials all the way through when the product is completed and sold. Now we'll do an example with those journal entries. Prepare journal entries to record the following transactions of a manufacturing company. Purchased $1,200 of materials on credit for use in production, used $200 of direct materials on job 1, and $300 of direct materials on job 2. So we'll do those first before we move into the next part of the problem. So the first journal entry will be to record the purchase of materials. So that will be a debit to raw materials inventory, and that will be for $1,200. Then it was bought on credit, so the credit is to accounts payable for $1,200. Then the second journal entry is, it looks like the company used $200 of direct materials on job 1 and $300 of direct materials on job 2. So accumulated, that is $500. So when we are moving the cost from raw materials inventory to work in process inventory, that is a debit to work in process inventory and a credit to raw materials inventory. And that amount is $500. So then if we move to the next part of the problem, I will erase this so I have some room to calculate. The next part says, compute the ending balance of raw materials inventory. So at the beginning of the period, there will be some balances in all the inventory accounts. The beginning balance for those inventory accounts is the same as the ending balance from the previous period. So if there was $200 in the ending balance of raw materials inventory at the end of the month, then that $200 will be the beginning balance of raw materials for the start of the new month. So compute the ending balance of raw materials inventory. Its beginning balance was $200. So to calculate a balance, you begin with the beginning balance. So beginning raw materials balance Then you're going to add any purchases, so plus any raw materials purchases. Subtract out any direct materials used. And that will give you the ending raw materials balance. All right, so beginning raw materials balance was 200. In the journal entry that we did, there were $1,200 of materials purchased. So add 1,200. Then there were $500 of direct materials used. So subtract out the $500 that went out of raw materials. And that's going to give us, once you calculate that, an ending balance of $900. That's your answer.